Well, welcome to another deep dive.
Yeah, we have a really great one today.
Today we are looking at this huge structural barrier for fleet owners. It is like the invisible wall between surviving and actually scaling.
Right. It basically separates the real fleet owners from, the struggling owner-operator.
Exactly. So before we unpack this, I want you to do something really quick.
It takes like 2 minutes.
Yeah. Go run the payment calculator at BusinessLoan.Directory.
It is super fast.
Right. It tells you immediately if your DSCR clears 1.25, that is for a $250K to $500K line of credit.
And we will explain that math a bit later.
Definitely. Just go run it and come back, because this deep dive shows you a very specific revolving capital move.
And it completely changes everything.
It really does. It permanently separates you from the owner-operator.
So let us talk about that defining moment. The exact moment you go from 3 trucks to 8.
Right. The big jump.
Yeah. So picture your phone ringing on a random Tuesday. A broker is offering a 24K load to Detroit.
Yeah,
auto parts. And it is due Thursday. So listen to what an owner-operator says here.
They usually stall, right?
Exactly. They say they must check their cash flow first. They promise to call back.
Because they're worried about fuel money.
Right. But a fleet owner just says yes. They tell the broker to send the paperwork over.
Just immediately.
Immediately. And that is not some personality difference. I mean, it is a capital structure difference.
Wow. And think about the competition. The guy who cleared $18K profit in 48 hours on that refused load.
Just scooped it right up.
Exactly. They used the exact same line. They had the same equipment. They just had a different capital position.
That is the whole thesis here. Cash runs an owner-operator, but capital runs a fleet.
That makes a lot of sense.
Yeah, you can survive on weekly settlements with 1 or 2 trucks. But the math absolutely breaks at 3 to 5 trucks.
Why does it break so hard, though?
Well, operating costs average $2.27 per mile right now. And fuel cards hit your account on Tuesday.
Oh, right. And driver pay hits on Friday.
Exactly. Plus, factoring takes a cut. And DOT inspections seem to cluster in the same week.
It all hits at once.
Yeah. One slow load totally wipes your cushion.
So you really have to reframe the whole situation. You do not ask if you can afford another truck.
No, that is the wrong question entirely.
Right. You ask if you have the revolving capital to run current trucks, to run them at full utilization.
Because if you do not, it is a complete nightmare.
It really is. I mean, running 5 trucks on weekly settlements is basically like juggling flaming torches.
That is a perfect analogy.
You just cannot afford a single misstep. You drop one torch and the whole thing burns.
So that brings us to the actual product.
Right. The strategic line of credit, it ranges between $250K and $500.
And it is completely revolving.
Exactly. You pay interest only on what you actually draw.
So what does approval actually look like for this?
Well, you need a 600+ FICO score, you need 6 months in business, and clean bank statements showing $50 plus monthly deposits.
Wait, so is there real estate collateral involved?
Nope. There's no real estate collateral required. And there are no stacked personal guarantees either.
That is massive. And the mechanics are really what matter here.
Break that down for us.
Well, you do not borrow $250Ks at once. That would be crazy. You borrow maybe $60 for 4 days.
Oh, I see. Just to cover fuel and advances on a single load.
Exactly. And then you pay it back when the broker pays you.
So the effective cost is literally pennies on the dollar.
Right. Which totally beats saying no to a huge load.
Let us compare this to a merchant cash advance, because people get trapped in those.
Oh, yeah. MCAs are brutal.
Say you get a $250 MCA at a 38% factor rate. It funds super fast, right?
Yeah, usually the next day.
But then you pay back $345K in 14 months, and it's on a fixed daily ACH.
That daily drain just kills your cash flow.
It does. One slow week forces you to stack MCAs.
And if you stack twice, your SBA loan option is completely dead for years.
That is a terrifying trap to fall into.
It really is. So, hey, if you run 2 to 5 trucks, hit subscribe.
Definitely do that.
We do one of these every week. We analyze topics niche by niche.
All right, so let us get into the pre-qualification playbook. There are 4 clear steps here.
What is step 1?
Step 1 requires 6 months of bank statements. Like we said earlier, they must show $50K plus monthly deposits.
Got it. And step 2?
Step 2 is right-sizing the ask. You target 30 to 60 days of fleet operating expenses.
So do the math on that for me.
Well, 3 trucks at $20K monthly puts you at $180K to $360K.
That makes perfect sense. Okay, so step 3 is gathering your documents.
What exactly do they need?
You need a P&L statement. You need 2 years of tax returns. Plus, get your AR aging report ready.
The accounts receivable report.
Right. Have your DOT authority and MC number ready too. Oh, and provide an insurance certificate.
Awesome. And that brings us to step 4. You pre-qualify at BusinessLoan.Directory.
It is really that simple.
Yeah, it takes 2 minutes with no hard pull. It routes you to Business Loan, Directory's 75-plus lender marketplace.
And the people there actually get it.
Right. Specialists there specifically underwrite trucking fleets.
So what does life actually look like after you get this capital?
Let us paint a vivid picture here. Picture a Monday morning in the dispatch office.
Okay, I am picturing it.
A broker calls with a $32K oversized port run.
Nice.
You say yes before he even finishes the rate. Then you draw $80 case from the LOC by 10 a.m.
So the money is just there.
Exactly. Drivers are paid, fuel is covered, the escort is secured.
And the load just moves.
Right. The load delivers on Friday, then you pay the line to 0 on Saturday.
Wow. You just completely own the lane.
You own the lane completely. It is a totally different way of doing business.
And the deeper context is that this outcome is not luck. It is pre-positioned capital at work.
It changes everything.
It really does. It overcomes the 31 to 45% bank denial rate.
Which is huge.
Yeah, and it completely bypasses the 60-day wait for traditional loans.
So listen up. You are still listening to this deep dive right now.
Which means they are serious.
Exactly. You are serious about scaling your fleet. Subscribe to the show right now.
Do not miss out. Let me remind you about the payment calculator one last time.
At BusinessLoan.Directory.
Yes. If it showed your DSCR above 1.25, then this playbook is your roadmap.
But what if their costs are too high right now?
If costs are eating your cushion, fix that first. Use working capital to solve it. Click the link.
Run your numbers.
Right. Pre-qualify when you are ready to load up and dominate.
Before we fade out, ponder this final provocative thought.
Okay, I'm ready.
Think about how agentic AI is changing everything. AI now evaluates non-traditional data to approve these credit lines in minutes.
Wait, really? In minutes?
Yes, traditional banking is being completely left in the dust by this.
That is wild to think about.
It really is. Right capital at the right time.